Sarah, why don't you kick things off?
So what are private equities doing to, I guess, distinguish themselves from, well, in the buyer universe, from the likes of SoftBank and Vision, who are, you know, as we mentioned this morning, that SoftBank is looking to IPO its Japanese domestic telecoms unit to raise further funds for tech startups. What does that mean for the private equity universe?
SoftBank, I think it's kind of a unique creature. Massive amounts of capital. Very focused in what they invest. I think it's going to be mostly North America and Asia. The focus in Europe, I think, will be modest, but there certainly are a very big force in that space. This IPO will just strengthen their cash hoard, which is already phenomenal. So if I were a purely tech investor, I'd be a bit worried.
You'd be a bit worried. And what does this do to prices? Yeah, but what does this do to prices, though, if SoftBank has a bigger pool to draw on to do these kind of deals?
Tech is a market that has evolved quite a bit from an investment point of view. It used to be a very niche, small-end venture capital type of thing. With the development of some of those technology companies and the pervasiveness of technology, you have enlarged very significantly the market. And actors such as SoftBank are contributing to that. So I think it has broadened significantly the market, but at the same time, I have to say that the sheer amount of cash they have focused on that specific sector is quite impressive.
So Europe is seeing some increasing number of private equity-led take privates. I mean, what are the drivers and how do you see this trend playing out?
Well, private equity is becoming a broader asset class that has grown significantly. It is recognized as a very viable source of capital for, I would say, most businesses, while at the beginning it was a little bit more niche. So the addressable market for us has significantly widened. And I think we have proven to be a very successful asset class from a returns point of view, consistent over time. I think consistency of returns is something that investors are looking more and more, and we have seen Europe as particularly attractive. If you look at what the developments have been, Europe relative to other parts of the world, North America or Asia, has been quite attractive, and we're very proud of being in that pack.
And private equities have been diversifying away from their core, what you might call the core business model of buyout, and adding other strategies, credit, infrastructure, real estate and the like. Do you see this as something that carries on, this diversification away from the core, what it used to be a private equity business?
I think you will see a bifurcation of the market. You're going to have a few large global platforms that I think will have more asset class they can manage, while at the other end of the spectrum, you'll continue to have some very focused and dedicated people. I would say it will be less than 10 global players which really have the ability, the platform to spread across various asset class. I'm very proud to be part of an organization that clearly is in that group. So I think you'll have that group of the few large, and then the other one will remain very focused on what they do.
We were talking backstage about Brexit, and can you kind of give us an idea of, you know, how much does Brexit or these macroeconomic factors play into your investment decisions?
Well, they are an impact. I think it's important to remember that a good macro environment is not necessarily a good investment environment. So I'll distinguish the investment opportunity and the overall environment. Clearly, Brexit and the uncertainty around Brexit, I think more than what the actual outcome will actually be, it is more the uncertainty, has had an impact. M&A volume in the UK has dropped quite significantly, and I think it is mostly due to that Brexit uncertainty. Also because if I compare to the trend that we're seeing on the continent, where on the contrary is a very healthy environment, I think is really Brexit specific. We have seen our activity a bit slower in the UK. We've been caught in that same, sometimes I call it a wait and see syndrome. You just keep postponing decisions until you understand a little bit better what the rules of the game are. Presumably lasts another 12 to 18 months, and after that I expect the UK to start picking up again. Remember, the UK used to represent close to 50% of the entire European private equity market, so a very relevant
Would you have
market.
expected the weakness in the pound to have driven more M&A, despite the uncertainties?
I think for people like us, discontinuities are good things. Those are sorts of opportunities. The drop in the pound, I think it is something that we look as an investment, as possibly something positive. But in general, discontinuities are not bad things for us.